Well, hello, guys. It's your old buddy Danny Deals. Thank you for tuning in to another exciting episode of Un Poco Mas, the show where we give you just a little bit more. Start things off with a Topper time check. It's 12:53 p.m. out here in beautiful Los Angeles. On June 28th, 2023, we have 7 minutes till the stock market closes. Guys, we are talking, of course, about the SOFI stock, ticker symbol SOFI. The stock is up again today, was up a big earlier, leveled off, has traded sideways and slightly down. Again, I told you guys a long time ago, a week or two ago, that the stock was going to consolidate between $8.13 and $8.91 briefly, and then move up again through $10. I submit that that is still what is going to happen, and this stock. This stock talks to me in my sleep. It talks to me when I pass nice looking doggies in front yards. It just speaks to me, and I'm telling you guys, that's what's going to happen. I'm generally right. No, I'm not. I'm probably, 50-50. It's a coin flip, guys. But again, I told you that was the range. I knew 8 had flipped from resistance to support. I knew the shorts are illogically digging in on certain days to keep the stock where they want it and covering on other days and letting the stock go up. And I'm pretty sure, guys, institutions are going to just continue to load the boat up until the day this stock hits net profit, when people are just going to pile in pension funds, hedge funds, major institutions, mutual funds, etc., etc. Guys, I told you, if you go chronologically through the filings, a couple of insiders have sold a few thousand shares, a minor part of their, between like 5 and 20% of their holdings. But guys, this is small potatoes. Look at Anthony Noto on, these are all 16, 15 June. On the 14th of June, he added almost 600,000 shares in that filing alone. I'm not saying that was in that day, but on that filing. And then LaPointe again added. And then if you go back to the 31st of May, where institutions had to file, Vanguard absolutely loading the boat, another 1.3 million. State Street. So this talk that institutions are dumping the stock is absolutely false. I can show this to you. You know, any which way you want. You go over to tip ranks. It again charts the positive bought versus sold, 8 informed transactions in the last 3 months. Heavy emphasis toward buying. If you look. If you look in May, 12 buys, 3 sells. Back to April, 5 buys, 1 sell. Back to February, 10 buys, 1 sell. January, 2 buys, 1 sell. December, 1 buy, no sells. November, 11 buys, 0 sells, and back and back and back. September, 10 buys, 0 sells. July, 2 buys, 1 sell, and et cetera, guys. So, you know, I'm saying facts over FUD here, guys. Facts over FUD. Everyone in the media would have you believe that insiders are dumping shares, guys. But I mean, selling a few shares to diversify and pay taxes is not the same as like bailing out of the company in a fire sale. So the media, the analysts, they use a lot of different tactics to create a false narrative. Guys, if we look at the options for Friday, man, this volume has just absolutely gone insane, guys. Obviously, the value of these options has gone through the roof. The 850 now has 5,000, a few less, but the $9, 950 volumes are just completely out of hand, guys. I don't remember seeing short-term call volumes, 40,000 calls at 9, and then 68,000 calls at $9.50, guys. And that call is up 5 cents or 125% on the day, man. You have to believe that institutions are, letting go of the short, letting the stock move up, letting these things go. And they're probably, I said this yesterday, maybe I was premature. Don't read anything into that. But, I think they're going to let this stock run up a little bit and then just dump these options, probably doing so today and perhaps tomorrow on retail. I don't know. I don't see them letting retail make this much money. I don't know that retail's buying all these options. I know there's hedging, there's all kinds of short long stuff going on. They're covering shorts, they're shorting with options. Things well beyond my level of intellect and understanding, guys. If we take a look at the chart, what I said was basically the stock would consolidate between approximately this level here and this level here. And you see that really happening for the last since 616. So 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days now. The stock has been consolidating. I think it's going to go for a move up through 10, and I think it's going to go through 10 actually pretty easily. Once we get past this Supreme Court decision, guys, that pretty much takes all the overhang away from the stock. We know they do well whether interest rates are low or high. We know that student loan refis are baked into the numbers, and they need those to make their numbers. But guys, there's all kinds of other things going on behind the scenes with SOFI. And that's why I want to sort of just go down just a couple of things that I think the media just really tends to completely ignore. Like, if you look at the media narrative, just a couple of the major sites, SoFi up now to 887 or 2.6, like it's pushing up a little bit in the last minute of trading, which is always a great thing to see. Been doing that the last couple of days. Covering, buying in just the last minute is a very bullish sign. If you remember, a lot of times SoFi would sell off right toward the end of the day. Sorry guys, a little shinier than usual. Played some tennis earlier. Not quite cooled down yet, guys. Not in the best of cardiovascular condition, but I'm out there. I'm out there. Guys, stock market has closed 887, up 23 cents on the day. Very, very bullish chart. Pushed up and up and up early. Tried to sell it off, and the stock just held the gains, guys. Pushing to the very, very upper range of the consolidation that I talked about at like $8.91. We're going to push up through that, and when we do, I think we're going to break down that previous, little short-term high we made there, just over $10, and go ahead and go up and challenge my price target of $13.75 by the time the company is making a net profit. But if you look at the narrative, guys, they're talking about this. SoFi used a clever trick to reverse AI's biased images of women. I've heard a lot of people online talking about, SoFi's woke. SoFi's trying to focus on female customers and emphasize women in finance, women in, these types of careers, face of finance. But it's like, that's woke. That's woke. Guys, it's smart. Like I said, women are the majority of college graduates now. They're increasingly in finance, in banking, in all types of jobs. So, the fact that they're underrepresented sort of in the media, in terms of the image of the industry, you think guys in suits, guys. And I don't think there's anything wrong with SoFi trying to emphasize the role of women in finance. It's just silly, guys. It's smart business. Women should be, more than half of SoFi's customers. And, women, I don't think tend to invest in individual stocks as much as guys do. There's sort of like a gambling addiction. I think women tend to be a little bit more conservative with their investment strategies. That's just my intuition, women's intuition, whatever you want to call it, but men's intuition, so it's probably wrong. But anyway, guys, I think it's just silly that people are so bent out of shape about this. I don't think it's woke. I don't think they're trying to, shove anything down your throat, any agenda. I think they're trying to appeal to female customers so they can bring them in as members and sell them products and services, guys. That's what it's about. They put their name on a football stadium to appeal to men, and that's not anti-woke. That was also good business. They're trying to sell to men. They're trying to pump up men, trying to get men as customers, trying to appeal to women, get women in as customers in a slightly different manner. I don't know why guys are so insecure about everything. Not everything's about you. Not everything's an affront to you. It's just marketing, guys. Marketing toward women, you should not take it as some threat to your masculinity. You're way, way, way too insecure. Anyway, guys, moving on. I don't really consider myself woke, but I'm not threatened or angry at SoFi trying to advertise to women or emphasize that they play a much larger role in the industry than people might be aware of. I think that's a very good thing. Anyway, guys, end of snowflake rant here. In any case, guys, so you have a lot of negative stories. SoFi dips more than the broader markets, what you should know. They emphasize, again, the downgrades, three downgrades. They reiterated Truist, but they didn't put the reiteration of Jeffries up. Even on Yahoo, I'm sure it's an honest mistake in this case, but if you look at the quarterlies, they don't even have the numbers up yet, like that they should have for revenue and earnings. And that stuff's been out now for what, like 2 months? So they don't even have that up there, but it looks really good for SoFi if they did put it up. But of course, they don't. Guys, what's going to happen with this chart? I think, it's pretty clear what's going to happen. The stock, if you look, just came up. It's trying to push past the 50-day moving average. Challenged here, popped up above, came back down below, touched it again, dropped back down, pushed back down, and then came back up, and we're sitting like just about to cross the 50-day moving average now. Guys, new article yesterday. I took you through this article by Ahan Vashi. In Seeking Alpha, SoFi, the only bank you want to know right now, he made an argument utilizing formulas, numbers, math, that his true value for the stock is at $11.75. Can't really argue with any of his numbers. They're actually fairly conservative in his model. Again, encourage you to read that if you have the opportunity. Another article today, just to run through something else. So this is more of a neutral article. Amit Singh in tip ranks. SoFi stock marked a swift recovery and gained quite a bit. Still, the average price target indicates limited upside. They talk about, analysts are cautious. SoFi's business took a hit from extension of student loan repayments, further rising interest rates took a toll on home loans. Recent banking crisis posed challenges for financial services. However, pause on student loan coming to an end in September would witness an uptick in loan origination. Student loan refinancing are expected to recover. SoFi indicated that it doesn't expect the revenue from student refinancing to reach pre-pandemic levels in 2023. And yeah, you wouldn't think it would, guys, with payments just starting at the end of Q3. You don't think just in the Q4 they're going to ramp up quite that much. It's going to take a couple of quarters, I think. And then, of course, if interest rates start to come down next year, that's going to accelerate the whole process. But as for the home loan originations, the company expects to benefit from the acquisition of Wyndham Capital, but the higher interest rates could hurt volumes. Investors could wait for more clarity on student loan refinance volumes and home loan originations. Its personal loan business is likely to sustain its momentum and could continue to offset the headwinds from the other two segments. And that's what it's done thus far, and quite nicely. SoFi's balance sheet remains strong. SoFi's balance sheet is strong despite macroeconomic weakness. Its deposits grew by $2.7 billion quarter over quarter and exceeded $10 billion in total deposits. Impressively, over 90% of its consumer deposits come from sticky direct deposit members, according to the CEO. Furthermore, 97% of its deposits are FDIC insured. SoFi's cash and cash equivalents increased by $1.1 billion to $2.5 billion in Q1. Additionally, its on-balance sheet delinquency rates and charge-off rates were healthy at the end of the first quarter and remained below pre-COVID levels. Guys, that is extraordinary. Its balance sheet delinquency rates and charge-off rates were healthy at the end of the first quarter and remained below pre-COVID levels. The price target is 909. If you average it out, it applies limited upside potential of 1.7%, at least at the time of this writing. But guys, a lot of these neutral articles, a lot of these analysts that downgraded, like Oppenheimer and Bank of America, they're bullish on the SoFi stock long term. They just think the stock doubling, more than doubling in a month was too extreme, too far, too fast, kind of got out over its skis, outran its coverage. If you are talking punt coverage terminology, perhaps you were a punter at a Midwest junior college and you just never got it out of your system, or a place kicker, anything like that. Guys, I don't know what position Noto played. I know he was a standout linebacker at the military academy, or not a linebacker, but a football player. Maybe it was a linebacker. If you know what position he played, let me know down in the comments. Also, incidentally, Noto was top of his class as an engineer at the military academy. He is not a finance major or a lawyer or a PR guy or a douchebag or a turd. This guy's a trained engineer, top of his class, Army Ranger, I believe. All-American football player. Like the resume is insane, guys. I really like Noto. I really like Lapointe. I'm bullish on management, and I'm bullish on the SoFi stock. Let me go through a couple of other things, guys. The short interest, I got some really strange data here over the last, like, if you look at the last 7 days, Ortex is estimating that the short increased from like 11.7 to 16. Yet the free float on loan came down from like 20 to 18, and the shares on loan have come all the way down from 240 million to 145 million. So how are they shorting the stock if they're not borrowing the shares? Are they shorting it with options? Is there some type of trade going on in the dark pool? How does this data make sense? Can you make sense of it? I think it's a little bit incongruous, and my brain can't really wrap itself around it. Today, guys, we had 3.8 returned, 3.5 borrowed, so net change 300,000 returned, which is basically kind of neutral for the SoFi stock. 35 million shares traded today. So guys, volume has really moderated. The algo is definitely back in charge of the stock to a degree, but I think the difference is retail is not dumping. Retail is not dumping when they make these drops. People don't have stop losses set. I think retail is getting much, much smarter over time, looking at how this stock behaves vis-a-vis analysts, vis-a-vis media, how they manipulate the stock price and manipulate the behavior, and retail is simply not going along. So it's getting harder and harder to make money off the retail investor. Just a couple of reasons, guys. Let me just shotgun a few things at you. Reasons why SoFi will be over my target price of $13.75 when we hit net profit in Q4 of this year at the latest. I think we could do it in Q3, but I think it's going to happen in Q4 at the latest, guys. Number one reason, Galileo. Galileo is not priced in. And I've said over a long period of time, Galileo could be even more valuable than the other parts of SoFi, the banking, the finance, the investment arm. I think Galileo is the sleeping giant, and I know they paid a lot for Galileo, they paid a lot for Technesis, but these were young companies. They're not mature. Like Galileo was dealing with a bunch of smaller accounts. It's kind of all over the place, not really living up to their potential. The fact that now they're integrated with Technesis and they're under the umbrella of SoFi gives them more capital, gives them more credibility, is allowing them to go out and sell their services to much bigger clients that would stay with the company. You've heard Noto and Lapointe both talk a lot about this, about how, yes, there was a net reduction in the accounts from 131 million to 126 million. First time those have gone down since since SoFi bought Galileo, but they're talking about a period of transition where they're going to sign much bigger accounts that are going to be much more durable and bring in larger, reliable revenues for that side of the business. So I think that's one reason it'll be over my target. Next reason is a superior diversified business model. Guys, I've gone through this a million times, but the wheel strategy is just starting to work. It's going to drive customer acquisition costs down. It's going to increase revenues. It's going to increase margins. We know all about that wheel strategy. That goes into the superior management. Again, I've talked a lot about Noto. I've talked a lot about Lapointe. We talk about, why are they giving away so much stock-based compensation? Not only will those people have more skin in the game, as long as they don't dump the shares, but also we're going to have more cash to grow the company. I know dilution is never really good for shareholders, but in this case, up till now, I'm okay with the dilution. I want to slow it down. I want to generate enough cash so we can start paying the employees in cash. The employees have a lot of shares now. Let's get the stock price up to a healthy level. Let's get some profit. Let's get some green quarters stacked on each other. And if we can do that and we're actually making healthy net profits at the bottom line, I have no problem rewarding the management and executive team. But let's get to net profit, guys, at least in Q4, perhaps in Q3. Both the superior diversified business model and the superior management leads into the fourth reason, ability to adapt and succeed in all climates and environments. Guys, look at what SoFi just did. They took away their entire core business, student loan refi, with the pause with COVID. SoFi completely reinvents itself, continues to grow revenues from, 600 million to a billion, 1.5 billion, and I believe we're going to be over 2 billion this year. In that environment, that's insane, guys. That's crazy. Everybody's talking about how they're so dumb for making these personal loans to people with great jobs and great credit. Yeah, real stupid to be pulling in that high net interest income every single quarter, making all that. And the other thing people are talking about is, they just can't sell these loans. Noto's lying. Like, Noto's doing math. You guys are jerk offs. You turds are jerk offs. You don't know what you're talking about. Noto is doing math. He's not guessing. He's not saying, well, I think we can make more money holding these loans on our books and collecting interest, but I don't know. I feel like it's 4% this way, maybe 6-ish this way, 6, That's not what he's doing, guys. They're redoing these models, they're redoing the math constantly. They're on top of it. They're smarter than you. They're better than you. Learn it. Get on the bus, you turds. What's another reason here? Massive room to grow, guys. Think about options. Think about, just domestically. Think about internationally. Think about business accounts, guys. Business accounts leads me into whole other areas of growth. Think about bookkeeping. Think about payroll. Think about the synergy with Galileo and payment processing if we get business checking accounts. If you just offered somebody some interest on their business checking, guys, there's billions of dollars out there stuck in business checking accounts, locked up, yearning to be free and make interest, but it's stuck there making nothing. Guys, there's a million other things that business accounts, business relationships, B2B can get you into. Payroll, bookkeeping, benefits, health insurance, life insurance, 401ks. They could compete with companies like QuickBooks and TurboTax, and they could be doing all kinds of other services for businesses. We could be selling them services. We could be selling them consulting. We could be, selling them small business lines of credit. We could be making the same types of very high quality personal loans we're making to small and medium sized businesses. There's just a million places it could go. Guys, another reason I believe SoFi will exceed my target price of $13.75 by the time we make a net profit is that the weird activity that trades around the stock, guys, the level of short interest on such a good company is so unusual. Why didn't these market makers who we all think are intelligent, they know what they're doing, these companies who are shorting have been around for decades, they do this for a living, it's not their first rodeo, why didn't they cover down the fours, guys? Why didn't they cover in the fives? Everybody could have covered, you know, acknowledge that SoFi is going to make a net profit, that this Supreme Court decision, whichever way it goes, is not going to affect their bottom line hardly at all, and just moved on. Like, generally, when shorts are wrong, eventually they'll let go and they'll move on from a stock and they'll take their losses. Not so on SoFi, guys. I just show you, shorts use the borrowing to control the price of the stock. They use it to kill options. On days when they want to bring down the stock, they short the hell out of it. On days when they want to let it go up a few points, they return shares, guys. So this trading activity, why so much emphasis from market makers on this little turd of a company, this little SoFi? It's doing $1.5 billion in sales. Big deal. What's the big threat? They've refi some student loans, they write a few mortgages. SoFi's a nothing burger right now. Why so much emphasis on trying to hurt SoFi? Why so much emphasis on analysts coming out and downgrading the stock and taking it upon themselves to kill rallies? I mean, the guy from Oppenheimer basically said in so many words, I felt a personal responsibility to kill this rally. And he lied and said, like, oh, I was whipping the bears at 450, saying it's undervalued. I didn't hear you on TV saying that, you little chipmunk turd. Okay? Listen, guys, B2B business accounts are going to be a game changer. There's a bunch of other things I could put in there. Full suite of options. At least let people trade covered call, guys. We're not infants. We're grown men and women. Oh, but women are woke. I don't like girls. That makes me a man. Oh my God, guys. Come on. Let's get more female customers. They've got money. They want to invest. Nothing wrong with that. We've already got plenty of jamokes and jabronis and big smelly men. I'm tired of us. I'm just tired of all the complaining. Every time someone says something, it's a marketing thing. It's this, it's that. Guys, get over yourselves. We want everybody. We welcome everybody as a customer of SoFi. Everybody that has great credit and a great job, that is. Otherwise, you can hit the bricks, kick rocks. Punk ass bitches. Guys, I have been going on and on and on. I said I was going to keep this brief, but of course I lied. You can't trust what I say. That's just part of my spiel. It's not financial advice. I'm not qualified. I never give financial advice. But if I were to, I would say buy SOFI. Not advice, buy SOFI. Do it. Buy some shares. It's extremely undervalued, anywhere below 10 bucks. For God's sake, that was the SPAC offering price. 2 years ago, 3 years ago. They've been executing, they've been killing it. They've been growing for years. There's no value placed on that. They were just being traded below the book value, for God's sake. Everyone hates SOFI. Why does everyone want to hurt SOFI? Because they're a great business and they're going to grow from a tiny acorn, un poco acorn, into a giant, glorious oak that provides financial shade and security for us all and rains dividends down upon us like so many brown leaves in the fall in New England. Oh, the colors, I can see it right now. It's green. It's green. Those dividends are green, and I am going to collect them from the SoFi stock. Guys, final Topper time check. It's 1:19 p.m. out here in Los Angeles, 4:19 p.m. out in NYC on the East Coast. Hope it's a great day or night wherever you find yourself. Guys, the SoFi stock, again, closed at 887. Let's see what we're doing after hours so far, just for laughs. And it's up 4 cents, another 0.45% to $8.91 after hours. Guys, that's very, very bullish. Usually, anytime SoFi has a green day, it immediately gives part of those greens back right after hours. The fact that it's up another 4 cents is significant in my mind because it's good and I like it, so I'll attach significance to it. Because that's just the kind of biased pumper, SoFi cheerleader, cultist that I am. And I make absolutely no apologies for it. And if you don't like it, you can kiss my grits. Thanks for watching, guys. I'm Danny Deals. The show is Un Poco Moss on behalf of Hurricane Lopez and Stock Karen. You guys come back and see us again real soon. And again, buy SoFi. I don't give advice. Buy SoFi, you turds. Turd Army is strong.